Hey everyone, Chris Adams here. Just wanted to touch base with you real quick. One of the big questions we've been getting from a lot of our clients right now is, should I move or should I refinance? So that's a super good question to ask. It's really good to talk to your lender, talk about what your rate's actually going to turn into and how that might affect you on a monthly payment. And then, it's good to talk to your realtor too and see how much equity you have in your home. A lot of things we do with our clients right now, we do typically one of two things when they're kind of thinking of moving. So first thing we like to do is either come over to their house and give them a good estimate of how much equity they have in their property. And the second thing we like to do is take them out and let them look at a few properties to see if they really want to move in today's market that's out there. So I really like keeping current matters. They've got a really good article here on should you move or should you refinance when you're in here and you're taking a look at it. So the first couple things that they're going to go over in this article that I thought were very interesting is, what would it look like if you ended up refinancing your property? And it's amazing how many people haven't refinanced yet throughout the United States. They're pushing, and with even some higher rates that are here, right? They're saying there's almost 450,000 people who have not refinanced that are sitting around 6% on their mortgage rate. On average, that's out there, and a little over a million sitting at 4.39, and then about 3.7 sitting at that 4.21. And rates, right now are currently hovering around that kind of 3% range. So they give us a couple fun examples in here to take a look at. So the first one that they have here, they're just saying that there's a homeowner. They've got a $200,000 fixed mortgage sitting at about 6% interest rate. And then they'd be refinancing down to a 3% interest rate that's in there. So when you're taking a look at that, just simply taking a look at the payment at that 6%, they're roughly right around 1,200. That would bring them down to about 843. So big chunk of savings there, as you can see, per month, sitting at about 356 per month. That's out there, which equates to, a pretty darn nice chunk of money saved at a full year, right? Like about $4,300 that's in there. So the other thing that they continue with this example here, they're just saying if you ended up buying a house here, just say for 216,000 at the height of the market back in 2006, which was the median price of homes back then. Just taking a look at that, if they put 10% down, so their mortgage would be sitting at about 194,000 or so, and the average rate back in 2006 was at 6.41%. That was out there. So their payment would have been roughly about 1217. That's out there. So now this article is going to dive in just a little bit more here and take a look at if they were to buy a property right now, based upon about what the median is right now, it's about 366,000 that's out there. So they're talking about, all right, let's just say that you're going to go buy this new property. They're estimating that there's about $150,000 worth of equity in the property, and that's in there. So that's bringing them up to that $366,000 number that's out there. So after selling expenses, they're saying they'd be left with about 130,000 that's out there. And then from there, they're saying they can take that equity, put it down on a new property, purchase a home for 450,000. That's out there as well, which would be about 80,000 more than the current value of their home that they're currently selling in this scenario, right? So if they put down that full $130,000 down, that mortgage would be sitting at about 320,000 with a 3% interest rate. This is where things get really interesting, right? When you're taking a look at the affordability of homes, that monthly mortgage payment would be somewhere right around $1,350 for a home that was there. So that's only another $132 per month based upon their old mortgage, taking out that equity from there and buying that new property. So this is one of the big reasons why we've seen here in the Twin Cities that I know a lot of people say the housing market might be getting towards the high end, but if you look at the affordability just from interest rates going down, it is a super good market to still be able to purchase that new property, maybe one that fits your family a little bit better, and get into a property that really is going to fit your family better. That's out there for not a whole lot more, especially if you were sitting at a higher interest rate before. So it's also a good time to refinance as well, and make sure, especially if you are at one of them higher interest rates, just to save some money so you can kind of use that for your vacation or some kind of new investment that you want to get in on. So I just wanted to shoot a quick video on this because the housing market is red hot here in the Twin Cities, and it still is a very good time to be able to purchase property, mainly because of interest rates that are so low that's out there. So Anyway, that's all we got for you. But if you have any questions on the real estate market, or if you're wondering, how this is affecting the value of your property, I'm more than happy to, sit down with you and discuss what it looks like to buy in today's market and how much equity you have in your home. So, and if you'd like to see any other videos that are like this, please let us know what those are in the comments down below, and we'll be sure to make one for you.